Throughout history, gold has served as a cornerstone of economic stability, underpinning monetary systems and symbolizing enduring wealth across civilizations. Its allure stems from scarcity and universal acceptance, making it a refuge during turmoil. In the wake of World War II, vast quantities of this precious metal were relocated covertly, often under duress, reflecting the era's profound disruptions. These movements involved national treasuries, institutional holdings, and personal fortunes, many of which were redirected through clandestine channels. While the conflict concluded with defined alliances, the financial undercurrents revealed a more nuanced landscape, where control over assets determined long-term influence. This narrative explores the mechanisms behind these gold transfers, their wartime exploitation, and the lingering uncertainties that persist in global finance. To grasp the scale of these events, consider gold's pivotal role in the interwar period. By the early 1900s, many economies adhered to the gold standard, where currencies were directly convertible to fixed amounts of the metal. This framework fostered international trade, but also heightened vulnerabilities, as reserves became targets in geopolitical rivalries. As fascist regimes rose in the 1930s, forward-thinking administrations sought to safeguard their holdings. For instance, Dutch authorities discreetly exported over 120 tons to secure destinations in North America and the British Isles. Similarly, Belgian officials dispatched substantial volumes overseas, aiming to insulate them from potential aggressors. Yet these precautions often proved insufficient against rapid military advances. The German occupation of Europe in 1940 unleashed systematic appropriations of these assets. Beyond mere plunder, captured gold-fueled procurement strategies, enabling purchases of essential materials from impartial states. Swiss financial institutions in particular facilitated these transactions, accepting shipments with minimal scrutiny and thereby sustaining the Axis economy. A poignant example involves Belgium's reserves, initially entrusted to French custody, totaling 198 tons. They were later transported to colonial territories in West Africa amid France's capitulation. Under Vichy administration, this cash circuitously returned to German control, bolstering their military campaigns and illustrating how alliances could inadvertently aid adversaries. In contrast, some nations executed more resilient strategies. Polish leaders, sensing imminent threats, orchestrated a multifaceted relocation of their gold through neighboring countries like Romania and Turkey, ultimately reaching Allied havens in the West. Despite such successes, occupied regions yielded immense spoils to invaders, with bars frequently remelted to erase provenance, complicating future restitution. This erasure not only obscured ownership, but also perpetuated economic inequalities in the post-war recovery. Parallel to European events, Imperial Japan conducted extensive asset seizures across Asia. In territories spanning China, the Malay Peninsula, and the Indonesian archipelago, forces amassed metals, gems, and artifacts, channeling them into concealed repositories. Post-war inquiries referenced operations like the Golden Lily, where treasures were purportedly interred in Philippine caverns and passageways for eventual retrieval. While embellishments have mythologized these accounts, documented evidence confirms substantial unrecovered hoards, blending state-sanctioned extraction with elements of illicit enterprise. These actions exacerbated regional devastation, delaying reconstruction and fostering distrust in international relations for decades. As the tide turned by 1945, retreating powers attempted to disperse or bury remaining assets. Allied recoveries, spearheaded by specialized units focused on cultural and financial patrimony, unearthed significant finds. In Germany's Merkers mine, for example, troops discovered over 100 tons of bullion mingled with artistic masterpieces, offering a glimpse into the war's material toll. However, these revelations represented only partial victories. Much had already been disseminated through trade networks or secreted away, evading detection and prolonging debates over accountability. The transition to peacetime introduced new complexities as devastated economies grappled with reconstruction amid emerging ideological divides. The nascent Cold War amplified the value of unattributable resources, which could underpin discrete initiatives without diplomatic repercussions. Established in 1946, the Tripartite Gold Commission, comprising representatives from key Allied nations, aimed to equitably allocate reclaimed assets, ultimately disbursing approximately 336 tons to rightful claimants over several years. This effort, though methodical, addressed merely a segment of the estimated thousands of tons displaced, leaving substantial portions integrated into unofficial reserves or private collections worldwide. Neutral countries played ambiguous roles in this saga, often profiting from wartime commerce. Switzerland's central and commercial banks acquired vast sums in gold from German sources, some traceable to plundered states or, tragically, to Holocaust victims whose possessions were liquidated. Revelations in the 1990s, prompted by archival scrutiny, exposed prolonged confidentiality practices, prompting reparations and ethical reckonings. Comparable involvement by entities in Iberian nations, Scandinavia, and the Middle East served as conduits, highlighting how neutrality could mask complicity and influence post-war financial architectures. Human stories underscore the personal dimensions of these abstractions. Families in occupied zones, facing expropriation, sometimes concealed modest holdings in attics or gardens, only to lose them to informers or bombardments. Survivors of camps recounted how dental fillings and heirlooms were extracted, melted into ingots that entered global circuits, erasing individual legacies. These anecdotes reveal the human cost, where economic policies intersected with profound suffering, shaping collective memories and calls for justice. In the ensuing decades, such assets reportedly supported shadowy endeavors, including efforts to counter socialist expansions in Europe and beyond. By providing untraceable funding for intelligence networks and political maneuvers, this gold transitioned from wartime spoils to instruments of ideological warfare, demonstrating cause and effect linkages between historical thefts and modern geopolitics. Under the Bretton Woods Agreement of 1944, gold-anchored exchange rates, yet discrepancies in declared holdings suggested hidden accumulations. Major powers, having absorbed inflows during the conflict, bolstered their positions, sometimes at the expense of transparency, which in turn stabilized currencies but sowed seeds of inequality in international development. The enigma of unaccounted gold continues to captivate, with sporadic disclosures fueling speculation. Expeditions have probed forested caches, subterranean railways, and maritime wrecks, yielding occasional verifications amid numerous disappointments. Valued in contemporary terms at billions, these absences symbolize the fragility of property rights during upheaval, prompting reflections on ethical governance in finance. From a long-term vantage, World War II's gold dynamics prefigured enduring patterns in asset concealment. Techniques refined then, cross-border shifts, intermediary laundering and opaque structures persist in today's landscape, employed by states and private actors alike amid crises. For those navigating investments, gold's perceived invulnerability hinges on custodial integrity. Historical precedents warn of seizures in unstable regimes or regulatory shifts in ostensibly secure havens. This episode illuminates how economic histories inform resilience strategies, emphasizing vigilance in an era of digital currencies and volatile alliances. By examining these rhythms, one gains not merely knowledge, but a framework for safeguarding prosperity against unforeseen disruptions.